Hi guys, today we're looking at Qualcomm, ticker symbol Qcom. Using my 7 simple steps, let's have a look at the stock price over the last year. You can see around about this time last year, the stock price was at around $64 a share and has gone on an absolute tear. Look at these massive jumps on earnings here and here, and eventually hit a 52-week high of $167 a share and has gone down slightly since then, but has leveled off around about 130. If I just extend the chart here to the last 5 years, you can see that it is trading at all-time highs. I mean, it has been on a crazy tear this year. Just before I head on to my 7 steps, can you please leave a like on the video, as it helps me get this video out to as many people as possible. And let's have a look at step number 1, is the PE ratio less than the market. So Qualcomm's PE ratio is 22.44 and the current market average is 40, so that is a pass. Qualcomm is in the technology sector, and the current average of the technology sector is slightly over the market with 40.5, so with 22.44, that is a pass as well. Just looking at an extra step here, is it less than the historical average? It is not, so I'm not going to give an extra check mark there. Has the revenue increased for Qualcomm over the last few years? And the revenue has gone from 22.3 billion to 26.7 billion, so that's a pass there. The revenue has increased. Step number 4 is the profit increasing, and the profit has gone from just under 2.5 billion to just over 6.7 billion. So that is a massive increase over these last few years. That's a great check mark. They're increasing their profit. Are Qualcomm buying back their shares? And the answer is yes. It's gone from 1.474 billion to 1.131 billion. So excellent. They're buying back their shares with their free cash flow. That's good to see that they're rewarding investors like that. Now, are the current assets greater than the current liabilities? And yes, massively. Their current assets are over 18 billion, whereas their current liabilities are over 8. So they can easily pay off all their current debt with their current assets over the next 12 months. Are they bigger than their total liabilities? They're not. They're very close though, 18 billion to 20 billion. So I'm not going to give them an extra check mark there, but once again, a very bullish sign. And finally, is the free cash flow increasing? And the answer is a resounding yes. It's gone from 4 billion to 6.3 billion. So that is a pass. So in terms of the 7 steps, it's actually passed all 7. You can see it's done a perfect score. I haven't given it any extra check marks, but these are extra checks that I put in to really differentiate the stock. But in terms of the core 7 steps, it has passed 7 out of 7. So that is excellent news for Qualcomm. It's looking like a great stock already. So the average free cash flow of Qualcomm is 4.95 billion. So I'm going to look at their most recent number, as I'm bullish on the stock, and that gives a free cash flow yield of 4.3% and a free cash flow ratio of 23. And how I've got these numbers is I've took the market cap, added the cash equivalents minus total debt, and that's given me the enterprise value at 146 billion, and then divided by these numbers. So once again, that is 4.3% for the cash flow yield and a ratio of 23. So those are very, very good numbers. So Qualcomm does pay a dividend. It has an annual dividend of $2.60 a share, which is an annual dividend of 1.98%, which is a very good dividend. Not massive, but it is still a pretty healthy dividend for a growth company such as this. It is a safe dividend with 41% based on this year's estimates and 67% based on the free cash flow. So there's no issues paying this dividend. They're not going to have to take on any extra debt. And you can see they did increase the dividend in March 2020 by 3 cents a share, going from 62 cents per quarter to now 65. So they have had a track record of increasing the dividend if you're looking to get a dividend growth company. So just quickly looking at some analyst ratings, and they have it as a moderate buy with 11 buying and 7 holding, and an average target price in the next 12 months of $170 a share, which is a 29% upside, which is a massive upside. On the high side, $190, and even on the lower side at $150. So analysts are basically saying this stock will go up from its current share price. That's good to see. Just heading over to Simply Wall Street here, and surprisingly they have it at fair value at $101 a share. Simply Wall Street use a discounted free cash flow, so I am surprised to see that they think the stock is overvalued. Just to quickly summarize before I look at my models, you can see that it passed all of the 7 steps with pretty good numbers, and the free cash flow yield and the free cash flow ratio were in the values that I like. Close to 5% is excellent, and the closer to 20 is excellent as well. So these are very, very good numbers. So I've got my discounted free cash flow model here at the top and the Buffett-Graham intrinsic value, and I've calculated the future cash flows of Qualcomm and that has given me a calculated stock price of $159 a share, which is currently at a 25% discount based on discounted free cash flow. Now, I'm bullish on the stock. As you can see, this free cash flow number is increasing quite a lot, but I think this is more than fair based on the previous earnings and the analyst estimates. And looking at the Buffett Graham intrinsic value, they have it at a massive increase. Now, the reason for this is the growth rate and the earnings per share. You can see that it estimates it at a fair value at $318 a share, which is a 150% discount, but even better, a Graham price at $240 a share, which is an 88% discount. So the Graham price would be the stock that Graham would buy it if he wanted to hold the stock for 20 years. So these models are saying it's a buy right now. So Qualcomm is looking like a buy according to the fundamental analysis. So now I'm going to head over to technicals. I have the share price over the last year with the candlesticks. I have a 50-day moving average in blue and a 200-day in gold. So let's look at the last year. You can see here that there were very bullish signals in May as the price crossed both moving averages. And then there was a golden cross in July where the shorter day moving average crossed the 200-day. So according to the technicals, you would have bought here in May and June and held all the way to, at the very least, February, which would have been a great return on your money, anywhere from almost 100% on your money, which would have been crazy. More recently, you can see there are some negative signs on the technicals. The 50-day moving average is starting to drop and heading towards the 200-day again, and the price has actually broken past the 50-day moving average, but has had some support at the 200-day. It has not broken through that yet, so it looks like it's still increasing. The 200-day average will continue to climb, so will this provide support at that level? Technicals are showing still some bullish signals as it is going here, so the next few months are interesting. Right guys, I want to say thank you for watching. Please leave a like if you enjoyed the video, give a comment on your thoughts on Qualcomm, and consider subscribing if you enjoy investing in stock analysis videos, and I'll catch you guys next time.